Okay, so tonight by me covering as them me talk about him deposit. I'm plus still talk about him deposit now, but tonight basically what me like kiss him come across I'm also um time you may put him extra savings you go on top low or required equity blame me what it does is and by making by me borrow less from the bank. Now, the bigger the deposit, it can help him mail or reduce him loan amount, reduce him payment pressure or repayment pressure by mortgage, and possibly shorten him this mortgage period to also and by reduce him total interest to be paid over time. Tell you, online we all got mortgage, all but talking straight to some um, pay him, repay him is la mortgage, but you pay him the amount of interest is more than the actual principal whereby you pay. That is why well that's how bank can making money belong. But you as a person where you work repay him this la mortgage, you need to really work around a solution that's workable for you. And so um, putting up equity or savings, saving towards your first home is very important. Make sure that you save him a good amount that should reduce your mortgage. All right, so now that you may base law uh, deposit, one illustration can where may like putting forward is example I would say I'm 400,000 kina long and then the 10% equity whereby you put in one time, but like you have to pay 40,000 kina upfront because house cost long and 400,000 kina. Now actual mortgage amount whereby you need remember 400,000 kina less 10% there, which is 40,000 kina, but you kiss him house loan for around 360,000 kina, and that is basically you repay him or you put him just like 10% straight. But suppose you smart, you'll do it this way or two planar option when we can plan the options, but two plan when we can give him lawyer is 10% is 40,000, but suppose you got additional savings lol narpla institutions where you save apart from if you're working that you save no bond super or nest fund. Suppose you save lol some financial institutions where you got housing advance as a product belong, then you'll be able to put possibly around let's say 60,000. So time you put him down 60,000 as equity below you less 400,000 less 60,000 and by you kiss him around 340,000 mortgage below you, and that is like you putting an extra effort to save another 20,000 on top of the required 10%, which is 40,000 for the house that is going to cost you around 400,000 kina. Say you very smart and you've found ways of how to do additional savings, or you starting on side business na liglig toya where you put him inside you save him, you're able to put like equity blue by around 80,000. So that 80,000 less 400,000 will give you a mortgage of around 320,000. So the good thing about this is that let me reduce him the amount of money where you need to borrowing, because when you start repaying that mortgage and by you pay him interest, bank like making money out from the money or lending you, and rightfully so because the money belong, so they need to make money from it. That's why interest and by on top. And you as someone who is smart and you know like lo pasimon this la mortgage go down lo pigini you or any other person, but you want to remove it quickly, the key to reducing that mortgage is having a savings. Must find means and ways to save as much as you can. If you just start work, you want probably in your late 20s or early 20s, and you start work, save up and cut out habits that can by draining finance below you, so that you can be able to save. And one ways when we can recommend them lawyer is tracking income below you, how much you're earning. If you're working low pay below you, and all side legal SME business where you working long, how much you earn in below this. So you're looking at how much total income will come inside low savings below you, and then put aside that money where you need to save low, and as much as possible save a lot. Also look low unnecessary spending. Like time you look low, especially the way to figure it out is you go to bank statement below you. The time you go to bank statement below you can look in spending habit below. What are some of the things that are not necessary, they are just wants, and you can cut them out. For example, going out for a coffee when you can actually make him coffee in the house, or your office play, you can buy a packet of tea, or and then just put him inside the office place, so that you don't have to buy it every now and then. And not something too is preparing meals for the house, you carry him go, so that you don't have to go out and spend every day. That's some of the ways where you can cut him down all expense below you. And one of the other thing is, people we really love to go shopping, especially lo second hand. The people go lo second hand, I think on man blow plus are less waiting because we can spend a good hours inside lo second hand. And plan blow go buy more plus something to buy kiram notes, and you come outside one time almost plastic clothes or so. So yeah, impulse buying is really bad. Just by the time you're gonna you not plan to buy just something, but you buy them, when you're conscious of that, make sure you make a conscious decision to change them just so you cut down on your impulse buying. Set a fortnightly savings amount. Separate your deposit savings from your daily spending, and not for something where Mr. looking plenty line also duty travel, and they get a travel allowance knowledge as much as possible trying to save him all this. So when you get that, put that money aside or push it to your savings, so that you don't just have one fixed amount, but every time you get the opportunity, like some additional or bonus or all this, put that money there so that it goes to work for you. And finally, last but to play is check whether you are eligible for superannuation housing advance, and review your progress every month. So you should hold yourself accountable to the way where you saving money below you, because to actually own a home, you can buy it without getting a mortgage, and it all comes down to you saving your money. And so you saving your money, and you're being wise in the way you spend your money. So I think that's all we wanted to get across. That completes our series on the mortgage readiness scorecard, which is deposit. We will talk about income tomorrow. Thank you and good night.